Hello everyone, K Kim here from Traders Club. It's been a while since I've done a video update for my blog followers, so I thought on this precious Saturday afternoon, I thought I'll do a video update here on the market. Today we're going to be looking at Spider, Diamond, Qs, and IWM, Russell 2000, and possibly XLF, the financial sector. So here are a few things I just wanted to kind of go over with you today is that, well, basically, we had a great phenomenal run ever since looking at Spider daily chart here. Ever since we had a kind of dangerous situation that was forming up over here. We're just grinding a little bit. We had that initial thrust and then came back down with the heavy volume in a three consecutive days here, as you can see that. And then what happened was, well, we found some support here in the 50 EMA. This is a 50 EMA has been acting as support back here. So this is a level that if we're going to find any support, that we are going to find support. And this, you can see the horizontal support level as well. And once we broke above, we had an initial threat there with a little bit of volume coming in. But then next day we nullified it, gapped up. Ever since then, we had a great bullish run. We had a great bullish run, and I think, and that was a great run. And we were essentially, what we did was, though, well, what happened was we had this channel lining up here, as you can see that, and we broke above. We broke above that channel, and we started going higher. But then what happened was in the middle of a run, we had that steep. That downturn, a steep, very fast, heavy bearish move there with a very high volume, as you can see that. So I mean, if it was just kind of some kind of a flagging action, I thought that we could possibly find some support at that 10 EMA and this old resistance new support thing, and then continue. But it wasn't just flagging here. We actually had a pretty strong, shooting star like candle happening there, and then gap down, gap up. It was very choppy, and then gapped up again here, but then what happened was, well, bears brought it back down again, and then it gapped down again, went up again for a few days, which I thought this was starting to look more like a possible bullish pennant pattern there, which is suggested more of a bullish setup. But once we had a breakdown like this, it actually started to look more like that was just part of a bear flagging on this mini double top. So you don't really truly know what the formation is going to be until the market starts to show you, because it truly looked more like a a bullish pennant there. But once we broke down yesterday, now it started to look more like this very mini double top here, neckline being right over here. And we broke that neckline yesterday with the high volume, I might add. And also we're closing below 10 and 20 MA. And I want you to kind of pay attention to that 10 and 20 MA, because I'm about to show you what happens once we break below 10 and 20 MA. But before we do that, I do want to note that, well, you can see that this mini double top being it's not a big like double top, like I said, that would be a problem. But I think this mini being double top, to be honest with you, I'm not sure if this pattern alone could really bring this thing down to, I don't know, like 150. If anything, we'll need more data to find out and ascertain that if we can do that. However, there's a possible area is that, well, we can see that right here. This is the gap area right over here. So there's a possibility that it's going to come down and fill the gap. Also, we've been talking about this 50 MA that could act as support. So I mean, this could come down here pretty fast, and maybe fill this gap and then test that 50 MA, which 50 MA that coinciding with the uptrend channel, that support level here. So this is a level is probably going to be watched by many, and this is a level that we need to watch, because we start breaking below this level, then there's a whole new another analysis that we're going to go on. But for now, looking at this spider daily chart, you can see that we definitely broke this mini double top neckline there. You know what I mean? And we could, maybe on Monday, we could have a fizzling action over here just below the neckline. But if we find weakness with the low volume at that level, you can expect that this could come back down here to test that 50 EMA and that uptrend channel support there. But here, what I was talking about earlier, they broke 10 and 20, and this is what I want to talk about. Well, we broke 10 and 20 over here with a 2 days of a bearish run. We broke 10 and 20, which didn't do much. We found support 50 pretty quickly there, so that didn't work out. We broke 10 and 20 here with a 2 days of bearish run. So you can see that here's a couple times, 2 out of 3 times, that once we break below 10 and 20, there's about few days of bearish run that comes with it. Also, I was studying this channel action on Spider, looking at this past performance. You can see that back here we also had what it looked like a channeling action here. This was back in October 2012, and well, what happened was we broke below 10 and 20, and however what happened was, well, we channel support was right there, but what happened was, well, we went back up, but then see what happened was we never able to make another high. So that is going to be very important thing that as we watch the Spider this week is that, well, if we do find bounce this week or next, it is imperative that we come up here and make another high. If we don't, we could see some kind of consolidation happening like this, up and down, and then it could break. And so that initially was a possible leaning triple top pattern there. This was being neckline, tested neckline, failed, and then came back down. So if you're looking at over here, this could come down here, goes back up, but if he fails to make higher high, okay, if he fails to make higher high here, that's going to be a problem. But if he continue to oscillate here, we're going to be looking at some kind of major double top or triple top, because this was a mini double top, but this could actually form a major double top or triple tear. So that's something to watch out. So we come down here, and obviously we have to watch it's going to break down or it's going to come back up. But I have a feeling that it's been very, very strong rally ever since the last November here, the Thanksgiving week, after the Thanksgiving weekend. So I won't be surprised to see a lot of buyers at this level. But then what we have to watch, when it comes up, is it going to come up and just thrust higher, make another higher high? Because that is the definition of uptrend, is that, well, higher low, higher high. And so the thing that we have to watch out is, are we going to go back up and make a higher high, or is this going to start to channel a little bit, which that could turn into some kind of a triple top pattern there. And also I want to look over here. It's the same thing happening here. We had this is a back in October 2011 to 2012 April. This was a little bit little bit choppy and a little bit not really symmetrical channel there, but nonetheless we've been just kind of grinding in this vicinity here. But what happened was we start breaking below 10 and 20. Okay, we've been really just what we're doing is really respecting that 10 and 20 level. We did have, however, possible breaking down below, but we're right back up. But this time we broke 10 and 20, we stayed below, and then we had about 2 days of run, and then it went back up. This is what I want you to see, is we went back up, but we never failed. We failed to make another higher high. So then we had the retracement. So that's what we're gonna look for, the bottom of the trend channel there, and then it probably gonna, just like today, where if it comes down there this week or next, it's probably going to find some support. But the key level is, are we going to make and come up and make a higher high, or is it gonna contain it, or bears gonna make sure to push this or protect this level to make sure the bulls don't come into their living room? And then once this neckline is breached and broken, this was a double top pattern there, and then this thing had that correcting move. But once we start to make another high there, you can see that we were able to find another run. So let's look at another one here. This was back in what is this, 2011, that flash crash here. But before that crash, we had an initial signal of this channel there. It was very tight channel action there. Well, what happened was initially moved sideways. Here's what I want you to notice, that this day right here, this actually looked like a bullish pennant, or some kind of a rising, some kind of a symmetrical triangle, for a tight symmetrical triangle, which it looked like what was happening today. But what happened was, well, it broke below 50 MA, caught on 100 SMA, and then initially though what happened was we did make a higher high. You can see that high there, higher high, but we were short-lived, and it come right back down inside this area right here. And so we had a very up and down movement here, but initially forming kind of a panoramic view of a head and shoulders formation. And well, what happened was we had an initial double top here, and then that thing crashed. So, and here I know for sure that there's some kind of MACD divergence here as well that you can look into. So possible scenario looking at these. Come back here. This thing just possible scenario just looking at past price behavior, price action is that, well, basically what we can do is we can come back down here, find that support, and then goes back up, but it fails to make another high, so then it comes back down, it goes back up, and then create that triple top, and then it could have that risky that corrective move there. Or if it's going to come down and break this but meet with that 100 estimate, just like we saw, I think it was 2011, and then goes back up, we try to make maybe find another high, but then we form some kind of head and shoulder pattern there, maybe steeper correction. Or I mean, it's still early to say, but I'm trying to do my best to forecast what we could be expecting. Or it could just come down here, find the support there, and goes higher, and then this thing just continue chugging along. So there is a different scenario that we could play, and I always like to know every possible scenario that we could expect on the indexes, so that I can go on and maybe continue hold or get out of the trade, or when I look at individual equities and I can look for different setups. Like, is it going to be bullish setup? Is it going to be bearish setup? Am I going to go for position trading? Am I going to go for swing trading? All of that has to be decided with looking at the market as a whole. Because if market is going to tank, then what I mean, it doesn't make sense to start going in bullish long-term trading or any kind of swing trading positions, just because if market starts to tank or start to have a corrective move, it's going to be very tough to go against the the current tide. So that's a very important there. So that's a spider there. Let's look at diamond real quick. Diamond's pretty similar case. I won't go into every detail, but just looking at this tight channel that I've drawn here, you can see that we're very, very close. We're very, very close to the upward trend there, or that the support there. I mean, this could be just one day stop and then just go higher. Like I said, this looked more like a tight symmetrical triangle, or more like a bullish pennant, which was more like a bullish setup. Remember what I talked about in 2000? When was this? Right here. This was back in 2011 May. So isn't it interesting? 2011 May and then 2013 May. Or June, 2013 June. See that? Broke down with heavy volume there and heavy looking candle there. 2011 May, end of June, we had a similar formation, though I mean the sentiment of it is completely different, but we had a similar formation here, and then broke down, and then we initially had a pretty big sell-off there. So I mean I'm not saying that's what's exactly going to happen, but I love to look at the past price action, because each equities or even each indices have its own personalities, how it likes to move, and and it gives you the hint before it starts to make any kind of move. Obviously, we're going to need more price action, more data to conclude anything, but at this point we definitely broke out of this what it looked like a bullish pennant, like it did back in 2011 May, but then it resulted in some kind of steeper correction there. So because of it broke down this possible bullish pennant or the triangle formation, now it doesn't look like that. Now it looks like a mini double top, doesn't it? Look at that, up down. Okay, and then we broke that, and just like diamond or spider, we broke that neckline here, broken that. So I mean, we come over here and then goes back up, or are we going to form some kind of a triple top or something? I don't know yet, but that's definitely, it's level to watch. It's this level right here, is that obviously we have a gap area right there too. So I mean, it's gonna come all the way down and fill the gap and meet with the 50 MA right here. At this point, this is a 50 MA they ping, but Dow Jones weren't really respecting that 50 MA that much, as you can see. Let me just zoom up a little bit. As you can see that this is 50 MA way down here. Dow Jones were really respecting this uptrend channel line more than the 50. 50 is just kind of hovering below, protecting it just in case it falls a little bit lower. So I wouldn't be surprised diamond being, just have a tighter trade range. This is going to be the range that we're going to be looking about. Then on Monday we could find a support here. We find some kind of a slowing down candle like that with some high volume. You can see that these 2 days, this day was a very high volume there. And this is one of the reasons why you pay attention to the volumes, because volumes will tell you what these little guys are mean. Because if we came here with the low volume, the little guy with the low volume, that just means he could come down. It's just resting. But then when it comes with the high volume, it just means that there's a lot of protective move happening. Buyers are coming in and protecting what happened. That's why after this bearish run, we had that rest, 2 days of rest. But there wasn't just rest; it was protecting this support, and then bulls continue its run. So this volume, looking at these volumes, are very, very important in case, especially when it happens at the top of his channel or bottom of his channel or at a resistance or pivotal level. That right there, my friend, that was string star like candle with that kind of volume. You pay attention. You pay attention. That's basically, after that we weren't able to make another high, and then this thing tanked. So you gotta pay attention to these volumes, especially on the indices. I know lately people are saying stuff like, well, it's indices, you don't have to worry about volume, it's gonna do what it's gonna do. That's what has been happening, yes, but if you look at the panoramic view and just go search and research into past behaviors, volume is very important to look at. Otherwise, well, why worry about volume? Why don't we just throw away the volume indicator? Just because it hasn't been working lately doesn't mean that it's not going to work, in a consistent basis. It's not going to be perfect every time. Volume is not going to work every single time. We could have had a huge volume. It could have continued. Doesn't mean that, we shouldn't worry about the volume. Anyhow, so diamond, this is a level that we're going to watch, and we'll see if we can break down below that level. And if we do break down below that level, 50 is to watch, 100 SMA is to watch. Those are 148 and the 144 level. If we do come back, the level to watch is 155, 154. See if we can get up and make a higher high here. Still, then if we do make a higher high, then we'll resume the trend. Higher high, higher lows, and then higher high. However, it comes up there, and then we form these equal highs, start to make equal highs and equal lows. We started from double top or triple top, then we can able to see that, well, there's a high probability that we could have a corrective move here. Let's look at Qs. See, Qs looks more like this triangle formation there. It looks like more like a bullish pennant. I do want to look at 2011. Was it 2011 May? See if we have any kind of similar pattern. Well, not really, not like diamond and spider. This was actually like a mini double top. You can see that this was a mini double top pattern there. This was a bigger scale double top there. So we don't have something similar. This kind of looks more like just also mini double top there. Okay. So nothing we can go back and say, well, this looks like a something that formed before. But however, if we start breaking below this right here, this support, then we can look at it just like diamond and spider. That, well, that looks like a mini double top. Okay, you can see the up down, and broke that neckline and then coming down here. And then if that's the case, then we can say that, well, that looks kind of more like this one here. I'm not saying we're gonna do this. I like to look at this different behaviors just in case that we could find something. But here we had a mini double top right here, never played out. We never broke that neckline here. This thing continues. So those are the levels you're gonna watch out. But if diamond spiders start to fall next week, then you can expect the Qs to follow. But if diamond spiders start to just really slow down at these bottom of the channel level, then you'll find that Qs also probably gonna slow down, because the Qs didn't break below this lows right here from several days ago. It just still up here and still forming this possible bullish pattern there. So we have a little bit mixed signal. Diamond and spider looks more bearish because we broke down and below this this support here. But Qs are not. Qs is just still forming this possible bullish continuation pattern. So this is a level we're going to be watching here, and possibly this gap to channel formation on Qs because we broke out of it pretty much. If I can just draw that right here and put the channel there. So basically what we can expect is if this thing do break down, we can able to see that either it's gonna fill this gap right here and meet with the 50 MA and then continue higher, or we can just come down into this level of resistance, new support kind of thing here, and then goes up, and we have to watch this level. Are we gonna make another high? If we make another high, then we can assume that the trend is intact and that we're continuing with this bullish run. However, like I said on Diamond Spider, they comes down, goes up, comes down, goes up. We form some kind of this tight channeling pattern. It could be either double top or triple top, could lead to something different, or just because we had a little middle double top here, didn't work out, went back up, and then we formed this this double head and shoulder patterns here. We could be expecting something like that, so that's something to watch out. So we have to, there's all different aspects we have to look out for and watch out. So that we can able to protect our gains, protect our capital, and to profit to the downside and to short the positions or going into the puts. So lastly, I wanted to look at financial sector, because financial sector, to be honest with you, is starting to have more of a symmetrical double top pattern. What I mean by symmetrical is it has that sentiment of just double top pattern, which looks, I mean, right now it's not breaking down, but this right here, this, to me, that looks a little bit more bearish. I know that we haven't broken here, so we don't have a confirmation, but we initially didn't have that. People are looking at this as some kind of bullish pennant, and then we broke out, and then we came back down. So then now this looks more like a double top pattern here. You can see that double top pattern, and then volume came up on Friday. Okay, on Friday, and then bears are pretty much making sure that bulls are not making another high. Okay, so this looks like up, down, you know what I'm saying? So that's a sentiment there. So once this thing starts to break below that support, the neckline, we could expect more downside to that. I do wanted to see if there's something similar back here. This was a back in what is it, March 2013 here in XLF, and I was telling our subscribers that watch this level right here, because what we're seeing, this is what I'm talking about, is well, it went up and it gapped down and gapped up. I want you, okay, look at that right there, that circle, and on this a rectangle pattern. Look at that circle, and then look at that guy. Okay, and then let me just move this real quick, and let me just put this on right there. Okay, isn't that very similar? Very similar. We have that 2 days of rest, gap down, gap up, and then we had a huge bearish candle there. So if we can just look at that and say, well, can we possibly be forming something similar? It might not, you know what I'm saying? But it's just, I like to look at it and see that what we can possibly expect. And so we had that, and then came down, went back up, and then came down again. So we had a lot of volatility up and down moving like another week or so, but broke down, and then we trying to get it up, but then we never able to make another high. So we had a support here, neckline, resistance there, and then this thing had that tankage. So it's definitely financial sector. You really want to pay attention, because financial sector is going to many times is an early indication of overall market. So when Diamond Spider is breaking down, financial still up there, people could say that still looks good, doesn't look that bad. However, this looks more symmetrical double top. It's not ambiguous double top, because right at the top we seen the sentiment changing very quickly. So that's one of the thing about that is that the bears are defending this place. We come down here, and if it goes back up, initially we're gonna form that mini triple top, just like back we did over here, up down, triple top, neckline broken. We trying to get up there, never couldn't break above. Well, we tried it, but bears pushed it down, and that was it. And that's when the bulls cracked. Okay, so that's definitely something to watch out. And here's a little thing I want to show you here. Why financial is going to be important in the overall market. For the overall market is that here, we're looking at No, not this one. This one. We're looking at Spider here, and we're looking at also. So we're looking at Spider at the top. We're looking at financial sector XLF here. This is we're looking at 2006 all the way to 2013. And here's what I want you to see. You can see that back here before the crash, we had Spider making higher highs, and but what we saw was financial sector we're started making lower highs. That was the early indication that there's gonna be some corrective move. I mean that can't justify the fact that we're gonna have a market crash, but it was an early signal that something was going to happen. And ever since then, we had these necklines here. We never closed above neckline. We never made high. We started making lower high. Then that was it. We had a market crash over here. Same thing here. We essentially made an equal highs a little bit, and then you see that financial we started making lower highs. Okay, and then we had a very steep that flash crash there. So again, we don't know that yet. It could just continue to do this or something like that. But this is what I'm watching before a steep market correction. We probably gonna have a just short-term correction, and then we probably gonna have some volatility like we did over here. So to be honest with you, I don't think that we're going to have a market correction. I don't think it's just gonna come down like this. I think we are going to, if we're going to have a correction, the market spider is gonna do something like this, and then all of a sudden XLF is gonna do something like that, and then you see that diverging. And then you'll know that there's some steep market correction there. Obviously, this is not the only indicator that you should be focusing on. There's other indicators to confirm that analysis, like MACD divergence, and look at the money flow index. Is the money flowing into the market, and all of that, and then you put that analysis together, and then you could make a final decision that this is a very dangerous situation, and this could, it could lead to something bigger. But for now, we don't have any danger warning signal here on this comparison chart. And then but however, for short term, it's being in financials, this double top starting to confirm or starting to look more like a double top here, just because that candle right there, this is what we call one black crow candle, very strong reversal candle there, was special when it's confirmed with the volume. So this is a level XLF that you're going to be watching at these two levels. Once we break this level, this could come back down here and maybe even fill this gap over here in this level. Or if we start to go up and down, we'll be forming some kind of a mini triple top, something like that, and then we could have some steeper corrective move there. So, well, hope this has been somewhat of a helpful to you, and I hope you guys have a great weekend, and happy trading next week.